In this video, I'll talk about several things that happened today that make me really worried about where Dogecoin is heading from here. Before we look at some really bad signs for Dogecoin from today, let's look at some other bad news from today. So Warren Buffett student Monish Pabrai said that the worst is not over. He said, "I think most cryptocurrencies and investments will eventually be a big zero." Also, a recently published report by CryptoRank reveals a lot. As per the report, Dogecoin's mining revenue has massively dropped in the last year. 1 year miner revenue change for Doge stood at minus 76.2%. This puts the meme token into the first spot among the top 5 most unprofitable mining options. A more than 70% drop in Dogecoin's mining profitability is certainly not making miners carefree. Even though Dogecoin is the best among the worst in mining profitability, it still hits the top 3 in recent daily mining revenue with $1.07 million. In this case, Doge declared itself as the worst among the best. Things are so bad for miners that the second highest yield after Bitcoin shows Zcash with minus 18.7% annual profitability. The further down the table, the bigger the gap, with Ethereum closing the top 3 with minus 43.6% annual profitability. Now let's talk about Dogecoin's social performance on Twitter. Overall, there is an immense amount of accounts with a large following that has posted about Dogecoin over the past 3 days. These accounts are important for the Dogecoin Twitter sentiment as their posts are garnering the majority of impressions in the Doge community. Most of these accounts are crypto-related and should continue posting about Doge here and there, which can help maintain the positive Doge sentiment. Now let's come to the really good news from today. According to data shared by WhaleStats, a Binance Coin whale has purchased a large amount of Dogecoin. The BNB whale, who goes by the pseudonym Scarlet Witch, made the transaction earlier today. Per the data shared by WhaleStats, the Binance whale bought a whopping 400 million Doge, worth $31.66 million. The transaction, which occurred earlier today, saw the whale pay a meager 0.11 fee. Also, Scarlet Witch is one of the top whales on the Binance Smart Chain and is ranked as the 74th largest in WhaleStats ranking. Now let's talk about Bitcoin for a minute. And then there was another important analysis that we need to look at. We need to look at the stock-to-flow model for a minute. Just to refresh your memory, this model attempted to predict the price of Bitcoin based on supply shocks stemming from Bitcoin halvings. An analyst called Timur revealed an S2F-inspired supply model, plus 2 more models that track the adoption rates of the internet and mobile phones. According to Timur's modified supply model, Bitcoin could be somewhere around 64K by 2025. This is about a year after the next Bitcoin halving. He said, "The close-up below shows that this more modest supply model has been more accurate than the original S2F's projections for this halving cycle." Timur said that based on the adoption of mobile phones, Bitcoin could explode in value and trade at 144K by 2025. He also made sure to say that if Bitcoin follows the adoption rate of the internet, Timur's model would suggest the fact that Bitcoin has topped out and could trade at 47.7K in 3 years. He then said, "I remain bullish on Bitcoin as an aspiring store of value in a world of ongoing financial repression, but the above exercise is a good reminder that we should always revisit our assumptions, especially when the price action deviates from expectations." And then, veteran futures trader Peter Brandt has suggested that the price of ETH could drop to as low as $1,260 in the coming month. The Ethereum network is now in the final steps of its long-awaited merge with the Beacon chain and transition to proof-of-stake. The merge is slated to go live in August if all goes to plan. The switch to POS will massively decrease the energy consumption of the Ethereum network while also improving its security. If the bearish scenario he outlined for ETH comes true, it would mark a further 29% drop this month. Also, Mike Novogratz, the CEO of Galaxy Digital, believes that the majority of hedge funds that invest in digital currencies will fail due to the current market decline. He said, "Volume will go down. Hedge funds will have to restructure. There are literally 1,900 crypto hedge funds. My guess is 2/3 will go out of business." According to Novogratz, the continuous drop in prices of cryptocurrencies over the past 6 months can be attributed to the market's reaction to the U.S. Federal Reserve's stimulus withdrawal. In early May, Novogratz said that crypto was very correlated to the Nasdaq stock market index, but that over time that correlation will eventually break down. However, he expressed his belief that there was still more pain to come for cryptos. And then Tom Lee, co-founder of independent research firm Fundstrat, said that he was unsure if Bitcoin would end the year above its starting price. Bitcoin price projections for 2022 have plummeted as macro pressures combine with black swan events such as the Terra implosion to send sentiment to near record lows. Lee believes that underlying strength is worth paying attention to now. He said, "It's a risk-on asset, so I think to the extent that Nasdaq and Bitcoin rally, it's helping us become more comfortable that the market's already bottomed." Lee brushed off the Terra debacle and redundancies at major crypto companies, including United States exchange Coinbase, saying that Bitcoin was acting far better than people expect. Now coming back to some great news, according to a recent report published by Deloitte, most U.S. retailers are planning to accept crypto assets for payments in the next few years. Around 85% of the surveyed retailers said that the crypto payments will be ubiquitous among suppliers in their industry in 5 years. Approximately 4 to 6% of merchants are planning to adopt cryptocurrencies to expand their customer base. 40% believe that their brand will be perceived as cutting edge after the crypto adoption, the report said. Retailers hold an increasingly optimistic view of digital currency as a form of payment and are quick to recognize this as a business imperative. Current spendings are still on the smaller side, but growing significantly. Not surprisingly, the larger companies are more likely to be making significant investments in their digital currency adoption plans. Over half of large retailers have invested more than $1 million in enabling digital currency payments, while only 6% of small retailers did so. Now, let's talk about how Dogecoin has done in the past couple of months. Dogecoin was one of the cryptos that took a heavy blow from a market crisis that broke out in March, resulting in a precipitous decline in its market cap. According to a chart by CoinGecko on Friday, Dogecoin is trading at 7.9 cents, which is a decrease of 4.1% over the past week. Its most recent price activity resulted in a market cap of 10.7 trillion USD. The closing market cap for Dogecoin in May was 35% lower compared to the opening day market value for the month. Doge saw a robust trading volume of 991 million, which corresponded to a market cap of roughly 17 billion. Nearly 2 weeks later, Doge started at 8.4 cents and closed at 7 cents. The trading volume was roughly 2.63 billion, which amounted to a market cap of approximately 10.97 billion. Since May 1, Doge's market value has decreased by 37%. Following Musk's initial reveal of his $43 billion Twitter acquisition, Dogecoin's market valuation jumped by about $1 billion, from $18.45 billion to $19.35 billion in 10 days. On zooming out, Dogecoin chart shows that Doge was forming a plateau after 3 December 2021 unless it broke down the 8.1 cents mark on 9 May 2022. In fact, after 11 May, the volume has been diminishing. Unless enough demand kicks in, we can't expect the token to test its 7.7 cent ceiling, let alone 20 cents. Leading indicators look pretty upfront with their bearish price indication. RSI, after 4 May, has been below the neutral mark. The volume oscillator, too, has been painting a grim picture. Earlier today, it stood at minus 23.44% with no signs of recovery. On the other hand, the width of the Bollinger Bands after 30 May looks squeezed, not hinting at the volatility marathon for the coming few days. However, Dogecoin's volatility in the last 30 days has mainly hovered around 88.28%. All these things point to the fact that the question of trend exhaustion is nowhere in sight, at least for the coming weeks. In that context, taking a quick look at volume can reveal a lot of profound information. After 26 April, there seems to be a clear downfall in the volume. This goes to assert that the activity of buying and selling was low. Also, its social dominance metric stood at 4.88% during press time, thus indicating that share of voice across all social media data has not been diminishing. In fact, it is showing that people are interestingly discussing the meme token even during this crypto winter. It is here to be noted that 56.72K addresses were in the money at the current market price of Doge. However, 139.81K addresses were out of the money at press time.